Hello and welcome to this Tuesday's morning market briefing. We've got lots to talk about, but firstly, GameStop shares soar after Roaring Kitty claims huge stake, as well as that Russia and China gas pipeline deal stalls over Beijing's price demands. We've got lots to talk about on the charts, also with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around soon to see that. Before we get straight into it though, make sure you subscribe. The first article to talk about is to do with GME stock. Now, the shares of GameStop have just surged, over 60% over the course of early Monday morning, and even at a point gaining a significant 100% of the shares value. This came following the most recent online post by Keith Gill, who is otherwise known online as Roaring Kitty. Now, I think many of you will be able to remember only a month or so ago, maybe a few weeks actually, we spoke about this exact topic, talking about this kind of GameStop saga returning to our screens once again, like we saw back in 2021, when of course we had that initial short squeeze with the likes of Roaring Kitty, otherwise known as Keith Gill, or the other way around, obviously providing a great deal of stock analysis insight and foreseeing the massive stock short squeeze that we ended up seeing, which led many retail investors to get involved in the market and send the stock price high into the sky. Now, obviously, we haven't actually seen that kind of fully replicated just yet, and ultimately, GameStop's share price has not reached the same levels that we've seen back in 2021. But ultimately, as we spoke about the last time that we spoke about this topic, GameStop's price has surged to the upside and has neared those previous all-time highs, reaching very significant levels not seen for a long time, basically not seen ever, apart from when we last saw the short squeeze in 2021. So this is obviously a very important topic and a very important issue because it's affecting investors, it's affecting the way people kind of see modern day trading, and also arguably some would certainly argue this is kind of becoming a form of market manipulation, which we know that Keith Gill was actually kind of questioned on back when the GameStop saga was taking place. So that's why this is such an important article to cover. Now, what we've spoken about before with regards to the last time, the kind of recent rise that we have seen in GameStop shares before this exact time that we're talking about now. So maybe a few weeks ago, that kind of period where we did see GameStop shares rise was as a result of Roaring Kitty kind of returning to the markets, as we had basically had radio silence from his Twitter account and other social media platforms, which of course kind of inform his close supporters and other retail investors, and especially the Wall Street Bets members. And ultimately, we hadn't heard anything from him until about 3 weeks ago, when we of course did receive that first Twitter post, X post, I guess you would call it now, formerly known as Twitter, of course, which was kind of this meme of a man leaning forward in his chair, as we do see with certain video games, that kind of natural reaction to kind of focusing in on a video game or even in a movie or that kind of thing. And that was kind of what he posted as a way to almost, some would assume, as a way to kind of represent that, kind of things were becoming interesting again with GameStop. And following that post, we saw GameStop's stock basically shoot to the upside within pre-market, and then during the market push higher, and then overnight, and then pre-market again the day after that, we saw price even push into, I believe it was around the $75 share mark, which is very, very significant. I could definitely be wrong on the exact price there, but it was around that territory, I do believe. That said, ultimately price did sell off throughout the rest of the day once price had reached those kind of peaks, and since then we've really seen price kind of trail down to that $18 a share level and $22 a share level, so between that range really, and only now we've started to see price rise once again, with price pushing to the upside after the GME kind of saga leader, that being Roaring Kitty, kind of returning again to social media by posting the actual size of his holdings on Wall Street Bets, which is of course a very infamous subreddit forum on the platform Reddit, which has become well known as the kind of place where a great deal of retail investors go to share their stock analysis, their outlooks, and that kind of thing. And of course, it's where Roaring Kitty really begun sharing his analysis back in 2021 and I believe 2020. So it has a great deal of significance with him returning to that site, and him representing such a large position is of course extremely significant, as it kind of does create this kind of interesting image where we have a great deal of upside opportunity should others get in the market in the same way that Roaring Kitty has. Of course, that's not the way you should look at stocks, but ultimately that's the kind of way that other retail investors have seemingly perceived it, and that's why we're seeing price now shoot to the upside. Very important article to cover, with this post highlighting to others on the popular Wall Street Bet subreddit that he had accumulated an absurd position worth over $181 million in the meme stock. The post made by Gill was made public late on Sunday and indicated that Gill was holding 5 million shares in the company, which he had purchased at the $21.27 a share price. Pardon me, sorry about that. Added to that screenshot also showed that he owned 120,000 call options with a strike price of $20, putting the total value of the options at $65.7 million. Roaring Kitty was the Twitter handle which ultimately was at the very center of the meme stock excitement back in the year 2022, when Keith Gill's deep value analysis highlighted that hedge funds had an exposed short position, which meant that if millions of others bought the stock and pushed the price higher, a short squeeze would occur. Whilst Keith Gill has now returned to the headlines following the GME saga in 2021, Roaring Kitty went quiet online, but just last month he returned, with the key investment figures highlighting there is still a massive appetite for the stock. A key thing to note is that 15% of GME's outstanding shares were on loan. So kind of a mumbled jumbled explanation there from me about the kind of article, about the topic, but I hope that gives you somewhat of an insight into kind of the kind of return of Roaring Kitty once again, and kind of what may be coming up then for GME. That's all to talk about on this article. Next article to talk about focuses more on the geopolitics, world tensions side of things, and ultimately also oil side of things, with Russia and China's gas pipeline deal falling flat. Russia has just failed in an attempt to conclude a major gas pipeline with China. This comes as Russia has found that China's demands for price and supply levels are just unreasonable, and therefore the talks have stalled significantly. Now, whilst we haven't spoken about this pipeline deal before, I believe ultimately we're always talking about either China or Russia, because of course they have such great influence on the worldwide geopolitical sphere, the worldwide economy. But ultimately, we kind of focus more so on these two nations with regards to their impact on world tensions, as of course world tensions have great effects on the market. We can name a few assets alone which basically depend on world tensions for their price to stay at certain levels, such as gold maybe, or oil, or other commodities, even the dollar. And so always talking about these, what's happening with geopolitics, wars, and these two key figures which are are commonly seen as enemies of the West, is so important to, of course, note. And whilst usually we're talking about Russia and China with quite a kind of positive sense with regards to their relations between one another, ultimately what this article does actually note is that there is somewhat of a souring between the two's relations over this very important pipeline deal, which does seem to be a deal which would greatly benefit Russia. As we know, of course, Russia has greatly struggled following Russia's invasion into Ukraine with the issues of gas and oil exports. Russia is a massive expanse of land with a great deal of natural resources being within it, and ultimately Russia over the years has exploited that through extraction and exportation, whilst using it for their own means as well. But ultimately, whilst Europe had grown quite fond of the use of Russian gas and oil over the kind of 2000s and 2010s, since the 2020s and Russia's invasion into Ukraine, Europe has really diversified away from Russia's exports, whether that be kind of just general goods, or of course their more important goods, that being their commodities, the oil and the gas, which Europe has really moved away from, and that was kind of really represented with that Nord Stream pipeline explosion. Ultimately, as a result of that, Russia struggled economically to kind of make up that loss, with their kind of oil and gas industry being very important for them. And so this pipeline offered a kind of safe haven for the issues which have really arisen as a result of the kind of diversification away from Russia. But what we're seeing here is kind of talks about what maybe the deal terms and conditions of that deal might be are really souring, and that is a bad thing for Russia, as it does seem like something which would more so benefit Russia at the way kind of things are moving than China, of course, which arguably has a greater deal of options. With this coming as Putin has been left without much support apart from the economic support from the Chinese leader Xi Jinping since Russia's invasion into Ukraine. Beijing, however, greatly disappointed Russia by presenting a very tough stance on the power of Siberia 2 pipeline. According to the FT sources, China's request has been to pay it has been to pay close to what Russia's subsidized domestic prices are, whilst only also committing to buy a very small fraction of the pipeline's planned annual capacity, which sits at 50 billion cubic meters of gas. Russia has a very worrying future with regards to their state gas export monopoly, that being Gazprom. However, the approval of this pipeline would transform that future. Gazprom, for example, lost $6.9 billion last year alone, which is its biggest loss in at least a quarter of a century, and is the result of Europe diversifying away from Russian energy. So, a very worrying issue for Russia, and it'll be interesting to see how this is resolved, of course, as these kind of economic wars still continue, as Russia does wage its kind of its invasion into Ukraine. So keep your eyes on this topic, and this article was, of course, very important to note. That's all to talk about on the articles, though. Lots covered there. Next to talk about, like always, is the charts, and also, like always, we're starting on the US 30, focusing on the Dow Jones, but more broadly also talking about US indices. Now, in yesterday's weekly market briefing, I did note how coming to the end of last week, price did retrace somewhat on that kind of larger bearish retracement that we had seen. So we kind of had a retracement back on a retracement, and that's kind of how we ended off last week, as basically over the past 2 weeks, price has really pushed to the downside for the US 30, as represented by these bearish candles. That said, pardon me, as we ended off last week on Friday, this bullish spike did take place, with price returning back to the upside somewhat and nearing actually somewhat breaching above that $38,800 level. But starting off the week, we have sold off once again. So now we're kind of forming this ranging motion after arguably price neared enough to this kind of key liquidity zone starting off the week, and so that's why we've seen this sell-off. possibly. Ultimately, though, it's kind of hard to judge where the US 30 could go from here, just simply because price hasn't really interacted with these key liquidity zones as we would usually expect. And so as a result, price is really sitting between these key support and resistance levels, and is not making any key moves either to one or the other, and is just sitting between them for now. Added to that, we don't have the kind of usual reactions to the fibs that we would usually expect, and so we're kind of just waiting for price to actually make its way up to one of these key levels, such as this higher area of liquidity or lower area of liquidity on the downside. So those are kind of two areas that we had noted as key zones for price to interact with, yet we haven't really seen much happen just yet. Ultimately though, this could be the start of price continuing back up again, as should this form another bottom, we're then starting to make higher lows, which of course is that telltale sign for a bullish trend once again re-emerging or emerging. So definitely keep your eyes on the US 30, as there's certainly some interesting things shaping up. Next to talk about, like always, is the dollar, where interesting moves actually being made, with price possibly now breaking below this double bottom. So whilst we did start off the week noting how price was kind of in this boring area, still sitting within this kind of area of consolidation and ranging motion that we've really seen since the mid-May. Ultimately, we've started off the week with a bang, with price shooting to the downside, dropping to the downside, and arguably punching through this lower area, this bottom of the market, which was formed around that 104.08 level, and price is currently in the process really of breaching below that level. And for quite some time now, we've noted this key area of liquidity and Fibonacci extension level of minus 27.2% Fibonacci extension level, which lines up with that key liquidity zone. And we for a long time said, it's likely that price is attracted to that level and will make its way down to that level should, kind of the bearish market sentiment remain. But of course, we never saw that progress. But last week, price did interact with that 78.60, and since then, it does seem like that bearish momentum has once again returned to the market, and now we could definitely be seeing price make its way down to that key liquidity zone. So keep your eyes on the dollar. Next to talk about though is Euro USD, which kind of reversing the image of the dollar is currently on this serious upswing, and we know that last week price did of course interact with that key Fibonacci level of 61.80, which lined up with that key liquidity zone. So that was a very important level for price to interact with, and since we've seen price interact with that level, ultimately Euro USD has swung to the upside and pushed for new highs, pushing above now this most recent range high that was made on Wednesday the 15th of May and Thursday the 16th of May, pardon me. So we are possibly now on this kind of upswing, making its way all the way up to this next area of liquidity, which lines up with this key Fibonacci extension level of minus 27.2. So it'd be interesting to see whether price can reach that level, either breach into it and continue higher, or then react from that level. But of course, we'll have to wait and see. So keep your eyes on Euro USD. Next to talk about is pound yen, which remains above that $200 yen for a pound mark. Which is of course very significant to note. So not $200, pardon me, 200 yens for a pound mark, which is very significant. But of course, price has really struggled recently to stay above that level, because ultimately price has been grinding away to push higher and higher, and finally reach that $200, 200 yens for a pound level back on kind of starting Monday, the 27th, and ultimately stayed above that level for Monday, but then fell off from that level, reacted with this 38.20 and key liquidity zone, and then tried once again to push back to the upside, failed once again, and now we're starting off the week with price on this kind of bullish swing to the upside, making up for the kind of bearish fall that we've also had on Monday. So a very exciting day, to be honest, for pound yen. It will definitely be interesting to see how things do play out for it. Next to talk about is Bitcoin, which has now just broken out of this bearish, bullish flag, pardon me, that we noted to start off the week. So price has really been ranging for Bitcoin, sticking between that $66,000 a Bitcoin mark, staying above that level, but not breaching above any new highs. Not making any new highs, and so we were kind of forming this bullish flag, which allowed me to kind of draw out this trend line, which we also represented using this key liquidity zone. And what does seem to be happening right now is that we are experiencing a kind of break, hook and go, where price is breaching out that key, bear bullish flag, and price is now retracing back onto that level, reacting possibly with this key liquidity zone, which marks as an area of resistance, and now possibly price will swing to the upside. We definitely will have to wait and see though, as this definitely also could be a false breakout. Next to talk about is gold, which is kind of just ranging at the moment. As we started off the week, we did note how price was either going to break below this triple bottom basically, or form a triple bottom. So break below this key liquidity zone or form a triple bottom. It does seem like we have formed this triple bottom now, with price swinging back to the upside to start off the week. So keep your eyes on gold. Lastly to talk about is oil, which has seen a very significant move today, or yesterday, pardon me, as price finally broke below that $80 a barrel level, or more importantly, the $81 a barrel level, which price had kind of remained above for quite some time as a result of kind of geopolitical tensions. But ultimately, seemingly, despite kind of OPEC Plus's extensions to oil production cuts, it does seem like external issues and possibly even the talks between Russia and China falling flat with their gas pipeline has led oil's price to drop now below both the $81 a barrel level, the $80 a barrel, and also $79 a barrel, pardon me. So very significant moves now for oil, with price now almost pushing into this key liquidity zone that we've previously noted. So keep your eyes on oil for now. That's all to talk about on the charts though. Lastly to talk about is the economic calendar, where to be honest we're not receiving much economic data today, so I'll get through it quite quick, but there is an important figure to listen out for. Firstly, we're receiving the British retail sales figure, as well as the Swiss inflation rate figure, and most importantly we'll be receiving the German unemployment rate figure, as well as the Spanish unemployment rate figure, and to end off the day we're receiving US factory orders figure. But that's all to talk about on the economic calendar, so not much, not as much as usual really, but we've covered lots in the articles, lots in the charts, and lots in the economic calendar. It'll be a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.